Welcome to OK Bitcoin 69. Consider to subscribe and let's dive into today Bitcoin news.
All right, we're back. Bitcoin on pace for its worst week in more than a year now. Our own Tanaya Macheel is here at Post 9 on what is driving this big drop. It's nice to see you. Welcome.
Thank you for having me. It's nice to be here.
Yeah, tell us what's going on.
Yeah, Bitcoin definitely trimming some of its losses today, but still it's taken another leg down below its 200-day moving average of about $57,000. And that is largely because of the trustee of the now defunct MT.GOX exchange. That exchange, of course, went bankrupt after a major hack 10 years ago, and they have now begun repayments to creditors, which was an expected event. So that is hitting the market now. And again, this is likely a short-term move that shouldn't fundamentally alter the more positive second half outlook for Bitcoin. It's still got a nice 30% year-to-date gain from here. ETFs are still in demand. And then, think back to how closely we've been watching the halving earlier this year in April. That was a known positive supply event, and we knew it would lower the amount of Bitcoin supply being produced, and now we have this other source of Bitcoin supply coming in and negating those positive effects from the halving. So, this also should clear out the way for a rebound later this year in the second half.
I thought it was interesting, the point that our own Josh Brown made recently on the idea that financial advisors, in his words, in a column that he wrote or a blog, that they've caved on Bitcoin. Just the idea that financial advisors are more open to Bitcoin and crypto in general for their clients. And thus, if you have a bigger investor pool, you at least have more excitement and money going towards this asset class.
Yeah, absolutely. And I think the ETF wrapper this year helped a lot with that. Obviously, it depends on the type of advisor you're talking about and the type of client that they are serving. It's not for everybody, but it is, there's a lot going on in crypto. There's a lot of volatility in Bitcoin, depending on how far back you want to look. Because those early days were a little bit crazy, Bitcoin is still here, and it has been relatively stable even this year, while kind of the altcoins have sold off a little bit more.
All right. Well, I appreciate you being here.
Bitcoin has recently seen a downturn, falling below its 200-day moving average of around $57,000. This drop can be attributed in part to MT.GOX's trustee initiating repayments to creditors. Although this move was anticipated, it has created short-term volatility in the market. Despite the recent challenges, Bitcoin has still managed to maintain a 30% gain year to date. There are positive indicators on the horizon, such as increasing demand for ETFs, exchange-traded funds related to cryptocurrencies. Additionally, the halving event in April, which reduced the production of new Bitcoins, is expected to have a positive long-term impact on Bitcoin's value. What's interesting is the shifting sentiment among financial advisors towards Bitcoin. Many are becoming more open to cryptocurrencies, seeing them as a viable asset class for their clients. This growing acceptance could potentially attract more investors and contribute to market excitement. It's important to note, however, that Bitcoin remains volatile. Its price can fluctuate significantly, which may not suit every investor's risk tolerance.